you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Welcome back to Real Estate Mindset. You guys already know this video is going to be absolutely bonkers. And now the data is in, and today I'm going to help uncover much of the trickery that's going on with the data. Now, I've been telling you guys that when we look at year-over-year data, what that's doing is hiding what's going on in the near term as far as the week-over-week or month-over-month information. Plus, now that we're past peak, the May and June 2022 peak, the numbers are now looking a lot more favorable than what they actually are. So I'm going to show you that there are several metro areas that are leading with price improvements that are really still down from their peak levels. Plus, I'm going to show you that Redfin continues to manipulate the trajectory of their charts without a shadow of doubt. There's no question about the things that I'm going to show you guys today, and it's all going to be data. It will all be linked in my description. But let's start by taking a look at what Redfin has to say this week. And you guys, real quick, for the algorithm, shoot me a bonkers below, hit like on the video, definitely hit notifications. Notifications are so important. But regardless, the name of this Redfin article is Housing Market Update. Declining mortgage rates lure sellers, not buyers, again, sellers off the sidelines, paving the way for 2024 buyers. I'm just going to summarize a couple of these paragraphs. Basically, starting with the first couple of paragraphs, they're very optimistic, saying that, oh, buyers are coming back into the market. Buyers are coming back into the market. And if you look here, the reason that they're saying that is mortgage monthly payments are $2,472, which again is about $1,000 more than what it was just 2 years ago. And now here's the optimism. Here's the foolish, reckless optimism. The mortgage payments are down. You can see here, roughly $264 from their October peak, but again, up 11% year over year. Redfin goes on to say that there are more homes to choose from. Again, we're seeing now the opposite impacts of what most people thought. With the rates going down, we're seeing more sellers get off the sidelines, not buyers. I'll get to that in a minute, but listen to some of this over-optimism. This is from some of the Redfin agents. I'm seeing an uptick in applications, an uptick in clients who have disappeared, reaching back out. Second one, the recent dip in rates is bringing optimism to buyers, but that's up against a normal seasonal slowdown in the New England market. So again, all of this optimism, all of these people getting off the sidelines, right? Interest rates went down over 100 basis points, right? The only problem is, guys, is now that we have the data, mortgage purchase applications are actually down week over week, not up. So I'm sorry to report, even with a 100 basis point decline in interest rates, mortgage applications and demand is actually going down, not up. But let's cover all of this week's leading indicators, starting with the daily average of 30-year fixed rate mortgages sitting at a 6.64%. I want to let everyone know that that is up from year-over-year data of 6.31%. So we're going into 2024 in worse shape than we went in 2023. And remember, in 2023, there was still optimism and there was still about $2.4 trillion of excess savings. That's almost entirely gone. Now, weekly 30-year fixed rate mortgages, as far as the weekly average, still elevated at 6.94%. It was at 6.33% last year. Again, you guys, this is signaling to us that we are in worse shape right now than we were last year. Now, here's where you see mortgage purchase applications. Again, this is down 1% from a week earlier, and year over year. Again, sorry for all this foolish optimism. I know you guys hear it in the media, but nevertheless, mortgage purchase applications are down, not up. Again, down 18% year over year. Now, despite the mortgage purchase applications being down, somehow magically, Redfin Home Buying Demand Index is up 5% from a month earlier as of this week. So 5% month over month. But again, year over year, it's down, not up. And it's down almost double digits, down 7%. We'll look at the charts here soon. Now, Google's searches for homes for sale is also down 7% month over month. They're saying year over year, essentially unchanged. But the thing is, guys, again, as rates go down, so does demand. Isn't that something? Now, take a look at this next stat. This is pretty mind-blowing. Touring activity is down 38% from the start of the year. And at this time last year, it's down 45% from the start of 2022. So activity, touring activity down sharply. All right, so let's look at this week's winners and losers. And what I'm going to do is I'm going to pull out the peak data so I can show you guys the true picture of, is Anaheim really doing that well? Is Fort Lauderdale doing that well? Is Austin only down 4.5%? So I'm going to show you guys all 5 of these metro areas from peak to current, and then I'm going to show you Austin from peak to current as well. But leading the way in the metros with the biggest year-over-year increase is Anaheim, okay? So Anaheim's up 16.1%. All right, so here's the median sales price over the last 5 years for Anaheim. Now, right now we're sitting at 850,000. But again, you guys, that's year over year. So that's from where my mouse is right here. So from November to right now, that's year over year. But when we look at the peak right here, again, remember, Anaheim is leading, right? Anaheim is leading. It's up 16.3%. But when we look at the peak right here, Anaheim actually peaked in May of 2022, as you can see, at 875,000. That's right, you guys. If we look at peak to current, Anaheim is down 2.8% or $25,000. Now, when we look at Newark is supposed to be up 15%. You can see that right here. So 15%, and that's actually pretty accurate. You can see this area didn't really have a correction. However, it did peak in October of 2023. It is down at 475,000. So it's down about $20,000. So not really too much change in Newark. Very interesting to see that. And if you really look at this 5-year history, I mean, it's gone up the whole time. Really no correction happening in Newark. Very interesting. Which brings us to our third metro area, sitting at Fort Lauderdale at a whopping increase of 12.5%. That's amazing, right? Surely Fort Lauderdale is going to be up from peak, right? Wrong. This one's a pretty big shocker, actually. So it peaked in March of 2022 at 600,000. You can see that on the bottom of the screen. It's now sitting at 547,000. So what that represents, you guys, is a loss of $53,000 or a decline from peak of 8.8%. Again, negative 8.8%. Now, number 4 is Miami, and Miami, I will say right now, is doomed. Miami is sitting at a whopping 11.8% price growth year over year. Now, when we look at Miami's 5-year median sales price, you guys can basically see it shot up. I mean, literally exploded. Now, it actually has a new peak in June of 2023, but what I wanted to point out is actually Miami has been sideways since about June of 2023. You can see that right here. So even though it is up over peak, it has been recently going sideways. So keep your eye on Miami. Last but not least is Nashua County, New York, sitting at an amazing 11% growth. You guys, absolutely amazing. 11%. Let's see what it looks like from peak. So you guys can see that. So we peaked around June of 2022. See that right here in June. Now, right now it's sitting at 710. So it is down $10,000. Not too much, less than 2%. But nevertheless, it never hit a new peak, despite it being the top 5 metro area in the nation. Think about that. Now, as far as the only 4 metro areas with year-over-year price decline, look at this list. All freaking Texas. Austin at 4.5. I'll show you that from peak. San Antonio at 3. Houston at 1.2. And Fort Worth at 0.2. And I'm telling you right now, the reason that is because we have hyper supply in every one of those metro areas with new construction. And finally, after all of this time, the price decline, which is great, it is crashing right now with new construction, is spreading to the existing home market. We see that right now. You guys, Texas is the #1 state of new construction. I have been to each of those metro areas. There's 100% hyper supply in those areas. But let's look at the real shape of Austin, because again, this is only saying Austin's down only 4.5%. However, when we go to the 5-year median sales price chart, you guys can clearly see that in May of 2022, Austin actually peaked. This was really bad if you purchased then at $670,000. Again, 670 is where we peaked. But again, because they're looking at year-over-year data, they're no longer taking into account peak price levels. So the reality is Austin's down $130,000 or from peak 19.4%. Okay, so Austin's down 19.4%. There are many metro areas that are down over 15%. And I want to take this as an opportunity to tell you guys the housing market is not the stock market. I understand that if there's a price crash in the stock market is generally considered 20%. That's not the same of the housing market. The housing market is much slower. And I have defined from the very beginning, the bare minimum price crash is 15% loss from peak. So we already have metro areas right now outside of just Austin that are crashing, even in California, you guys. So I would strongly suggest, if you really want to nerd out on the data, go back from peak to right now and see for yourself. The reality is what we hear right now in mainstream media is just reckless and foolish optimism. Now let's go over my favorite part of this video, which is the data visualization. Let's start at median sales price. And before you guys guess at what happened, let me explain the median sales price chart, because a few people last week got it wrong. Were confused and got it wrong. All right, so here's median sales price. And I want to let you guys know that the orange line, okay, so this orange line right here. All right, so to clear up a little bit of the confusion last week, let me explain this chart again. Sometimes I forget that we have new viewers here. If you are a new viewer, welcome. Now, this chart right here, first of all, the orange line right here, okay, that is showing us week over week changes in the 4-week rolling average of median sales price. Okay, so this is a week over week change. I don't know why some people got that wrong. Now, this chart also gives us the ability to compare year over year and year over year over year data. So the year over year is the difference between the orange line and the red line. That is year over year. But again, the trajectory of the orange line is week over week data. I don't know why people got that confused in my last video, but I wanted to quickly explain that. Okay, now right above my head, you see the trajectory of the orange line, which again is week over week data. So that starts from right here to about right here. Okay, so looking at that trajectory, and I've put my picture frame so you can see what the trajectory is. Now, remember what I was trying to tell you guys is when we have median sales price decline, this still goes up. But when we have median sales prices increase, this shoots up. Remember last week, it went almost straight up, and it was only an increase of less than $400. So if you were to guess, I want you to pause this right now. What trajectory, what happened this week? Did sales prices go up or down? Now that you've had time to think about that, to me, this line is clearly going up, even though the change this week, you guys, so the change this week was, okay, negative $906. Okay, so that's what a negative $906 week over week loss looks like. Now, I know that these charts are being manipulated because once it updates under the data center, the trajectory is all corrected. Again, if you don't believe me, everything's linked here. Check it out for yourself, but let's get back to visualizing the data. Again, you guys, to sum up the median sales price, that is up 4.2% year over year, which is measuring from here to here, but week over week, again, is a loss of $906. You can't tell that in that chart right there, obviously. Now, median sales price, the gap from median sales price and median sold price is getting smaller. That's very, very good. It is up, however, 5.5% year over year. It is down, though, month over month. Now, when we look at home buying housing payments, that's up somehow 11.4%. Again, from here to here is up 11.4% year over year. But if we look at year over year over year, we're up this much, you guys, in just 2 years. That's about $1,000 a month. Now, in order for things to go back to affordability, we need a combination of interest rates to go down another 3 to 4%, or wages, and I like this one, wages to go up about 60%. I like that one. I could use that one. Or values, I like this one the most, go down roughly 35%. That is how whack and out of fundamentals the housing market is currently. Now, when we look at pending sales, I mean, we feel the recession, even a depression right now in the real estate industry. I mean, sales are down 7% year over year. The real estate industry is taking an absolute beating. And again, this is a 4-year low. So we have a 4-year low for this time in December. Active listings are down barely 4% year over year. Again, you guys understand the year over year data now. So hopefully we start seeing that go back up. The lower that the rates get, I suspect that's going to go up even faster, especially in the spring home buying season. Now, I am concerned about another bailout. Okay, very, very concerned about another bailout. Obviously, bailouts can hurt us. It just depends on the type of bailout. Usually the consumers really pay for the bailout. Now here's data that I love to review. This is the supply. This takes into account the active units and the amount of buying. So we're sitting at 4 months of supply. That's kind of the start of a balanced market. Usually we need a hold at 4 and 5 months. We haven't been holding, but this is a 4 4-year high. Okay, this is a 4-year high for this time in December. You guys see that right here. So we have more supply than we had this time last year. We have higher interest rates, demand is lower, and excess savings is almost completely gone. So what do you think is going to happen in 2024? Comment below. And the price drops just continue, you guys. So in the last 4 weeks, we've had 5.1% of total active units lower their price. That's good. Again, this is another 4-year high for this time of year. You see that right here sitting at 5.1%. So we have more price cuts right now than we did last year. Again, the difference is, and remember what happened this year, we still had the excess savings and we still had a little bit of pent-up buying demand. I don't think we have that in 2024. All right, now here's Redfin home buying demand. Again, we have another 4-year record. So this is a 4-year low of home buying demand, which is what we want when we look at the rules of supply and demand. You guys can see right here, we're 7% under where we were at last year. So when all is said and done, I still think that people need to be especially cautious. We really can't lean on anyone. No one's talking about what price values are at from peak. They're just saying, oh, Anaheim is great. San Diego's great. All of these places are great. But when we really analyze the data and we look underneath the covers, we see a completely different picture. And I really hope that provided some additional perspective for you if you've been on the sidelines and confused. Now, I could tell you what I'm personally doing on the sidelines, and you guys should know by now I am renting. And even though I'm renting, I still own a property that I converted to a rental. My interest rate is 2.5%. Now, I didn't buy the house to become a landlord. It was just a situation. But nevertheless, what I'm doing right now is I'm increasing my purchasing power by improving my credit, my income, although that's taken a hit, and my assets. And I'm constantly studying the markets and the subdivisions that I want to purchase in. And if you guys want to learn how to do that more, I do have a free home buying class in the description below that's designed for primarily first-time home buyers. And I'm going to tell you guys, I put 20 years of my heart and soul into that class. I will have more in the future, but that is a great place to start. Now, other than that, if you guys are out there investing in real estate, you know I wish you luck, and I hope you win.